Have you thought about becoming financially free through real estate investing, but don't have the time or knowledge to get started? Welcome to the Real Estate Cowboys podcast. Each week, we discuss passive income investment opportunities in the red-hot Texas market. John Larson and the Real Estate Cowboys will show you how to leverage their team to build wealth in real estate through passive investment opportunities. And now, here's John.
Hello, everyone. This is John Larson with another edition of the Real Estate Cowboys radio show. I'm excited about this week. We got a great show. We have Graham Parham on the show. Many of my listeners probably know about Graham. I'm sure Graham might have done loans for some of my listeners. But we also had Graham on the show. He was the very first guest we ever had on the first ever Real Estate Cowboys radio show. So I'm excited to have him back on. This show, though, is about an investor spotlight. And some people might not know that Graham is also a real estate investor. And so he practices what he preaches. He does loans for investors, Fannie Mae loans, but he also invests himself. And he actually owns a couple properties with my company, American Real Estate Investments. And I believe we manage 5 or 6 homes for him in the DFW area through our management company, American Real PM. So really excited to have Graham on and excited to hear what he has to say and share some of his experiences with my listeners because he has been investing in real estate for quite a period of time and comes with a wealth of knowledge. He also works with a lot of the major turnkey providers. I'd say probably all the major turnkey providers in the U.S. And so he's been out and visited these turnkey providers, visited these cities and markets that they invest in. And so he's seen a lot. And so I'm really excited to hear what he has to say about his own investments, his own investing experience. And, just give us a little bit of insight on what he thinks about some of the other markets that he invests in, because he does invest in a few different markets. So this is our first investor spotlight. For any of my listeners who are listening to this show who are also investors and would like to share their story, I plan on doing more investor spotlights in the future. So if you'd like to come on the air and share your experience in real estate investing and how it may or may not have changed your life, I'm thinking most people, I'm sure real estate has changed their life to a certain extent. I know it's changed my life drastically. And so I'd love to have you on so you could share your story. I think that the listeners would really respond well to that. And I love hearing about people's experiences in investing in real estate. I love hearing success stories. So I'm really, really excited to hear what Graham has to say. So if you're interested in jumping on the show anytime, any of my listeners out there who have a great story to share, just go to realestatecowboysdfw.com, put in your information, just send us a message, let us know that you'd be interested in being on the show, and I'd be more than happy to give you a call and hear about your story. And if it sounds good, I'd love to have you on so we can share it with the rest of our listeners. But for time purposes, let's just go ahead and get right into the interview. For those of you who don't know Graham's been a mortgage loan officer for over 18 years. He is a leader of financial expertise in the North Texas residential real estate market and has developed a significant following among home buyers and investors. As an active real estate investor himself, Graham has a strong insight on what his investment buyers are looking for to accomplish their short and long-term goals. He is well versed in the 1031 exchange rules and processes and is a great asset to the Real Estate Cowboys community. Graham's team's mission is to consult every investor based on those individual situations and goals. Graham was also ranked in the top 1% of all mortgage loan originators in 2017. He was ranked number 4 in Dallas, number 11 in the state of Texas, and number 92 in the entire U.S. So that's very impressive. So I'm very excited to welcome back Mr. Graham Parham.
Hey, John, thanks for asking me. I really appreciate it. I enjoyed visiting with you in many aspects, but I love doing the podcast with you as well.
Absolutely. In case some of the listeners don't know, you were the first ever guest on the Real Estate Cowboys radio show, so you will always live in infamy for having that privilege.
Well, I remember listening to that after we got it recorded, and hopefully this one will be a lot better today.
It should be good. So Some of my listeners may not know that you are also an active real estate investor. You are practicing what you preach. You do a lot of investor loans for investors nationwide, but you also own turnkey properties as well. How long have you been investing in real estate, Graham?
Well, I personally been doing it probably a little over 15 years. I've been working with investor a little over 20, and I eventually pulled the plug after I kept seeing all these tax returns come across my desk, trying to figure out, what do these guys know that I don't? And I just say nothing. They're just doing it. And so I jumped in head first and bought my first one sight unseen from an investor that I've been working with. And then once I got the first one on my belt, I bought 8 the rest of the year, and it was easy. But I just didn't have a lot of the direction that I have today from people like you, making sure I'm buying the right product in the right area and so forth. But yeah, I've been doing it for about 15 years. So I've got a lot of learning on my belt. I've made some mistakes, but I kind of know what I have to do moving forward.
Great, and that's why I had you on the first ever investor spotlight. And so earlier in the show, I was telling my listeners, if anybody out there listening to this show, if you have a good story or good experience in investing in real estate and you want to share that with us, reach out to me on the Real Estate Cowboys DFW website and let me know what your story is. And maybe I'll have you on a show to spotlight your investor experience. But on to my next question. What do you personally like about real estate investing over the other traditional investment options out there? On my show, we primarily are talking about passive income real estate investment options, whether it's the turnkey rentals, some private lending opportunities out of an IRA or 401k. And you also know we do some stuff down in Belize, but what do you personally like about real estate over the traditional investments that are out there? Stocks, bonds, mutual funds, annuities, so on and so forth.
Well, I have a full-time job, and I do have a financial advisor. And he will call me periodically. I may get a call once a quarter. Hey, this is where we're at with this. We probably need to buy that. Fine, just do it. I don't ever argue it. I never try to study it. I just say, if that's what you think we should do, I do it. But beyond that, since I get exposed to the properties that these guys are buying day in and day out, I see the appraisals come across my desk. It's so funny because every time I see an appraisal, the first thing I do is look and make sure it made value. The second thing I do is I go down to the middle of the report and start looking at the pictures because I want to see the product itself. I want to see how the rehab was done. I'd like to go take a look at the neighborhood. So, I like to see, touch, smell the products that these guys are buying. When I see something that's attractive, I kind of cheat, because I get to see this stuff. Go, man, I want to buy one of those. And sure enough, I do. Just like when I see reports come across my desk for your clients, John, that's why I ended up buying from you last year, because you guys do a great rehab. So that I kind of cheat in that area. I know it. I breathe it. It's been rewarding for me, especially after my 401k went to a 101k. It's all been good. I have no complaints, and I'm going to aggressively get more each year for the next 5 years. That's at least my goal. If I get back up to 25, 30 properties passive wise, then, I should be fine.
Yeah. 20, 25, 30 properties you could definitely retire on owning that type of portfolio. So that kind of leads me into my next question. You've been doing this for now just over 15 years. You said you were at 25. How many properties do you own now, and what markets are you currently investing in?
I did a redo last year with an exchange, got rid of some properties that I felt were fully depreciated in some areas that I wasn't real pleased with, the asset itself, and it ended up buying in several different markets around the country. Bought several here in Dallas, obviously some from you, also in Ohio, Florida, Alabama, even down south in Houston. So, I'm fond of Dallas because I've been investing here forever, and Dallas is just a solid market all the way through. And one of the things that I discovered is last weekend I was stumbling across a collaborative website called The Bigger Pockets, and I'm sure many of you listeners are participating in that, and just happened to kind of go over to my profile and notice it was kind of naked, and I started saying, well, I need to update it, and it had a little slot there for my investments. All right, well, I'll throw some of my pictures in there and start doing some homework on some of the properties that I own. The two I bought from you, John, last year, I paid, one was $175 and another one was $171. That was a year ago. And today the 175 is worth 214. The 171 is worth 202. And that's in Dallas. And I couldn't wait to call you when I found that out because I bought the product because it was a solid product. The cash flows were good. It was in a good area. It had, because I live and breathe in Dallas, I know that our appreciation percentages are nowhere near like they are in other markets. But I got to tell you, we knocked it out of a home run on these two guys, and then the other ones were just as good. So, I don't really base my decision in the markets that I go in on the highly appreciable areas. I certainly don't want to see anything in a depreciating area like some of the East and West Coast markets are going at. But most of the properties that are in are strong turnkey markets, just like here. Mm-hmm. That's what bases my decision.
No, that makes total sense. But, with that type of appreciation, and from what I remember, and I'm sure as a loan officer yourself, you took advantage of finance to purchase those two properties in Dallas and probably put, 20% down on those homes?
Correct. Even though I've been in the business forever, but I see the numbers, and it only makes sense to use leverage. Leverage is your friend. Use it. And because I can send anybody that wants to reach out to me after this podcast an example. If you take $150,000 and you buy a house for $150,000 cash versus splitting that up into 5 properties with 20% down, you're going to make more than double buying the 5 properties in cash flow than you will on having that one free and clear. So leverage is your friend. Use it. And even though I'm Fannie Mae'd out, I'm over the 10 mark, I'm still using leverage on my properties.
Absolutely. Look, through the power of leverage, let's say if you refinance those properties that you purchased last year, or you sold them and you made that equity that's been built up in those properties tangible, you just made 100% or greater returns on your money just through appreciation. And we're not even talking about the 5 other ways that real estate pays you.
I know. If I didn't love the property so much, I'd do it. But I like those properties, and they're keepers. If this was 5 years down the road, I may consider that. But I'm just going to hang on to them if you don't mind.
No, I don't mind at all because we're managing them as well.
That's true. You are managing them.
Keep taking that management fee, and I have no problem with that. All right. So Graham, explain to me how your team at Highlands Mortgage. Let's pivot. Let's go to what you do in your professional life. Explain to me how your team at Highlands Mortgage is the best solution for real estate investors seeking finance for investment properties.
Well, I have to back up a bit before I talk about the team. I have to talk about the company and what we can do to deliver loans into the secondary market, because that's what we all do. You talk to the president of our company, he'll say, we are an originating company. You talk to the guy in charge of our operational department, the VP of operation, we sell loans, okay? And we do. Everybody does. The big boys, the small boys, we all originate. We sell them to investors. We bundle them up, okay? Back in the 07-08 bust, there was a lot of knee-jerking going on, a lot of things that have, required lenders to throttle back a bit on their decisions about how they want to do loans, especially investor loans, because the investor loans themselves are a hot potato right out of the chute. It's just a fact because they're higher risk loans. And one of the things that some of the bad guys were doing out there during that time period, some builders were having a team of scam artists bringing in straw buying, where they had the lender involved, the appraiser, the real estate agent, the builder, everybody, and then they would buy properties and act like they were going to rent them out, and 6 months later they went into default. Because of that scenario, they came back and rewrote the Fannie Mae guidelines that actually will penalize that environment that was focused on the builder at the time, but unfortunately, because you, as a turnkey provider, you are the builder. You're buying a piece of property distressed, you're rehabbing it, you're rebuilding it, and you're selling it. And the guideline itself says they don't like to see the people that are selling the properties be involved with the management post-close. Now, to me, and you and I, John, we both know that's a benefit. Well, because of that, the way it's written in the guidelines, many of the lenders out there will misinterpret that. which means consequently a lot of them out there will not do turnkey property loans. Doesn't matter if you got 800 credit scores, $1 million in the bank, make $1 million a year, it doesn't matter. And if the property's solid the whole 9 yards, they just won't do it because that guideline can't be interpreted correctly. So we as a company, we know our delivery. We know how to underwrite these things. I have my own 2 personal underwriters that understands the concept, and we have no pushback whatsoever from underwriting. We have no problems when we deliver these loans getting them back. So that's really the key to success for anybody that does turnkey property loans or investment property loans. Now, as far as the team itself, in my opinion, I think we have a kind of a well-oiled system. I will interview and talk with the client up front to kind of understand their needs and their growth and how they want to build their portfolio and try to guide and direct them in the right way. Once we've had that conversation, then we want to get them into a pre-approved position before they end up in your arena, because you certainly don't want to go down the path and they can't get the loan. And 99% of the turnkey providers will pretty much work very much the same way. So getting pre-approved is the key. And our pre-approval process, in my opinion, is pretty streamlined. We give you the link to the application page of the website. It takes about 10 or 15 minutes to fill out. My staff calls you back that same day, make sure everything's correct. We get the basic items that we need to validate your earnings and assets, like tax returns and bank statements. Once we have those, it takes us a day and a half to approve, and then we kick out the approval, both to you, John, as well as the client. You find a property, you execute a contract, you give it to us, we run an appraisal, get the title work, we go to close. And I know it sounds kind of simple. Yeah, we are in somewhat of an overly documented world because of the Fannie Mae guidelines, but we kind of know what we're doing. We get everything up front, so we don't cherry pick you. So having my staff understand this whole mythology of how it works, it's an easy process. We have a new dashboard for all of our clients that they can see where their loans are in real time. They can see it from not only their mobile app, but they can see it from their website. Okay, I've got all my documents in, the appraisal's order, it came back, the title came back, I'm clear to close, we're closing on this day. They can see it. They don't have to call us and email us every day. So that's kind of another good piece that we just kind of brought into play, but that's kind of how our system works. We think it's user-friendly.
Yeah, and I think the real term here is it's investor friendly. A lot of institutions, a lot of other banks out there, I've worked with almost everyone under the sun, I feel like. And there's some companies that, like you said, they won't even do turnkey loans, right? But then there's some companies that try and do these turnkey loans, and they're just not very investor friendly. That's the best way that I can put it. I mean, even like the big boys, the Chase of the world, Wells Fargo, Bank of America. I just did a deal with Wells Fargo at the end of 2017. It took them 90 days to close the loan. It was ridiculous. I felt like even the actual buyer himself was getting frustrated because we felt like he was going through 2 or 3 underwriting processes just to get this deal closed. And so it took forever, which makes me as a seller not really want to work with those lenders either, because we all want to close on these properties and these loans efficiently. And I do feel like Highlands does a very good job at that.
It's so funny that you said that. I got a call last night at 8 o'clock. Yes, folks, I am 24/7. I will take your call if I'm available. This guy was trying to secure 3 properties down in Alabama. So he was competing on a bid that he submitted, and it was actually to a real estate company. And what was hanging him up, his pre-approval, was from Wells Fargo. And the agent called him back and says, we don't want to do business with Wells Fargo. So he calls me. We got the app going. We got this app last night. We got him pre-approved about 30 minutes ago. We shot the pre-approval over to the real estate agent over in Alabama. He got the 3 contracts.
Boom. That's what I'm talking about.
Yeah. Yeah. So, the big boys, they've stumped their toe too many times. And when the consumer finally starts to figure it out, because take a look at even Wells' new rebranding campaign, they got to do something to, gain face again.
Right. So let's talk about rates. Everybody wants to talk about rates, where we're at currently with the market. What are you currently looking at, or what are we looking at across the country with rates? What is the rate with 20% down versus 25% down? And what would you say to people who are a little nervous to get in the game and start buying more property or buy their first property because they think rates are too high?
Well, I'm going to fall back on some of the tenure of what I've done. And, working with investors for 20 years. You talk to any of the seasoned guys out there, and they'll all tell you anything below 7% on an investor rate is a good rate, and that's still true today. The problem is we've all been spoiled by rates over the last 8 or 9 years, and so we are seeing them go up a bit. We're definitely out of the fours on investor rates. We're still in the fours on owner-occupied, and I always keep that in mind because there's always a difference between owner-occupied and investment. Could be anywhere from a half a point to, say, 3/4 of a point, on any given day. So there's 4 things that factor into the rate. Is the percent of down payment, whether it be 20 or 25, the type of property, whether it be a single family or a multifamily, the loan amount, and then, of course, the credit score. And credit scores are threshold by the highest of 740. They're broken down into 20-point increments. So I just locked in one just a few minutes ago where they were down into the 680. They didn't get quite the rate they were on the 740. Well, I'd say that was pretty close to being the same rate. They just end up having to pay like a half a point or 3/4 of a point. I can't recall exactly what it was because of that adjustment on the rate, the adjustment on the FICO scores. So to answer your question in a nutshell, John, I'm going to have to give you a range. We could be anywhere from, say, 5 1/8 to 5 3/4 with no points. And the 5 1/8 obviously would be the 25% down, whereas the higher score is with the 20% down. That's pretty standard for all lenders across the board throughout the whole nation. So we are in the 5s. The numbers still work even in the 5s. So I wouldn't get too nervous if they'd gone up to the upper 5s in some areas.
Right. And I know some other groups like Highlands where their rates actually even a little bit higher. So I was surprised to hear that they were that low for you guys still. That's good. That's in your favor. Now I'd like you to put your Nostradamus hat on. What do you predict rates will be in maybe, let's say, the next 6 months or to finish out 2018? Do you think there's a good chance they're going to continue to trend up? Could they get above 6? Or do you see them maybe kind of holding at where they're at for the remainder of 2018? Or do you think there's a chance that they could potentially go down again?
Well, if I had the true answer, I'd be living on Wall Street. But the fact of the matter is that there's a lot of factors that are coming into play on how these rates are being determined. Obviously, economy has a lot to do with it, unemployment, so forth. Even our administration is starting to get a little more positioning in the Treasury Department with the number of people that are on that staff. They're all, and I say Republicans. So, I think our president is, concerned about, making sure that they're stable. Other factors and other rumors and economists, they're all saying that we're going to have another blip, sometime in the third quarter. I'm probably going to say we're probably going to get another blip in the third quarter, and the blip may put us right at 6, maybe a little over, but I think we're not going to go too much higher than that. I hope not, because I'm buying a new house myself, and I'm trying to continue to buy properties myself, and I don't want them to get too crazy. And once again, I'll go all the way up to 7 on an investor rate. I really will. So I'm not too terribly concerned about it as an investor.
Yeah, no, that's a great point. And yeah, that's typically what I hear in the industry as well. Anything below 7 on an investor loan really still is a solid rate. I mean, think about what rates were 30 years ago. It's night and day. So, last thing I want to ask, since you have, over 15 years of experience with being an investor yourself and 20 years of experience providing loans for investors, any advice that you would like to give new real estate investors? Because many of our listeners, some of them are new, some of them are seasoned investors, some of them maybe only own, their first 1 or 2 properties. What advice would you give new real estate investors? And is there anything that you wish you could have done differently when you first got started in investing in real estate?
Yes. And John, you and I have talked about this several times. It comes down to knowledge. Part of my job is to be an educator for my clients, to bring them into the world of lending in today's lending environment. I'll send them out a guide. I'll try to explain everything to them correctly, but that's my job. Your job, obviously, John, is to educate your borrowers and your clients on the products, the returns, and so forth. And one of the things that I didn't do when I was getting started is I didn't educate myself. Real estate agent says, hey, here's a duplex I want to buy. Sure, man, I'm in the market to buy. And, of course, I bought it and sold it last year because it was a dog. And but if you are looking around the country, even in your own backyard here, John, and if you guys want to do business here, I highly encourage you, jump on a plane, come down, shake hands with John, look him square in the eye, let him show you some products, get to know him. Welcome, come by my office, do the same thing. But you can do that in every market that you're looking at, okay? Get the knowledge, get the education, feel comfortable with those people that you're doing business with, because here's what's going to take place, is being the supply and demand right now, it's kind of limited. So, you can come down here, look at a property that John's, about ready to put on the market, but somebody's already bought it, okay? But at least you get a feel for what type of products he's selling. So when that next one comes up, you're going to be shot an email saying, hey, look at this property. Here are the numbers. What do you think? Because if you don't like it, 20 minutes from now, somebody else is going to buy it, okay? And that's the same way it is across the board in all markets, okay? So educate yourself. Be prepared. Don't delay when you see something that's a good opportunity. Do not get your analysis paralysis hat on, because it'll kill you every time.
Absolutely. I'm a firm believer in that myself. I know some investors that bought sight unseen or invested with a guy because he was on Fox News or whatever it was, and they thought he was a good guy. And turns out that, the whole thing went south. And it's because they just didn't do the right due diligence. They didn't go out, meet the team, meet the property manager that's going to be managing the property, meet the provider, look at the neighborhoods, look at the properties. When you're first getting started, that is so imperative. Once you, get quite a few homes under your belt and, maybe you got a referral from somebody that said, hey, this is a good company. I've been seeing a lot of good returns from them. Their service is good. Maybe buy something sight unseen once you get a little bit more sophisticated. But early on, definitely fly out. Definitely meet the team that you're working with. And definitely go look at the neighborhoods and the properties that you're investing in. I think that is so imperative, because if you don't, it's just like any other investment. There's pitfalls with every investment option out there. And with real estate, if you're going to buy outside of your own backyard, you got to go look at it, and you got to meet the team that's responsible for managing the property and renovating the property and so on and so forth. So I think that that's really great advice, Graham.
Oh, yeah. I mean, like I bought 3 this year, and I have yet to see the 2 of the 3. And I'm hoping to before year end. I just hadn't had time to jump on a plane and head out there. I'm not too terribly concerned, because I know those people that I bought them from before. So it does happen. I mean, you will own real estate that you've never seen. And, some of the regulators, if they're listening on board right now, they go, oh, my God, we hate hearing that, because that's some of the things that put the downfall to the 08 bust. That's a bunch of bunk, in my opinion. Yeah.
Well, that's great advice, Graham, and it's great to have you on the show to talk more about Highlands Mortgage and what they can do for investors, but also talk about your experience as an investor. I think that pretty much that shined a new light on you for our listeners, and I really appreciate you being on, and we're going to have you on again soon, I'm sure. So I appreciate it, buddy.
No problem, and if you guys need some additional help, you can reach me anytime, like the guy last night at 8 o'clock. He called my toll-free number. I just happened to be available. So you can reach me anytime at my toll-free number, which is at 855-326-6802. If I'm not in the office, it will hit my cell phone.
Perfect. And, yeah, I'll have your information up as well on the Real Estate Cowboys DFW website. Once again, Graham Parham, thanks a lot.
Thanks, Sean. Enjoyed it.
All right, that was great to have Graham back on the show. He's a good friend of mine, and he does a great job over at Highlands Mortgage, and it was just great to hear about his experience investing in real estate, because he's definitely practicing what he preaches. He helps investors secure loans to buy turnkey rental properties, and he's also out there investing in turnkey rental properties as well, and works with a lot of the providers that I'm sure many of the investors are working with all over the country, including myself. So let's take a quick commercial break, and when we come back, we're going to wrap up this week's episode of the Real Estate Cowboys. Stay tuned.
Looking to complete a 1031 tax-deferred exchange and are needing financing for your replacement properties? Let Graham Parham at Highlands Residential Mortgage guide you through the process and make your 1031 exchange go smoothly and on time. As a seasoned investor, Graham owns several investment properties himself, and he can share with you the best way to plan your exchange. Graduate into a better property or properties and make use of leverage to obtain better cash flow and higher returns on investment. Highlands Residential Mortgage has one of the best in-house loan processes to deliver deliver your loan on time and without any surprises. We are 1031 exchange friendly. Call Graham's toll-free direct number today at 855-326-6802 for your free mortgage consultation, or visit us online at texasinvestorloans.com. Highlands is an equal opportunity lender, NMLS 195724, located 1201 North Central Expressway, Dallas, Texas 75234. Highlands Residential Mortgage, NMLS 134871, is not a financial advisor.
And welcome back to the Real Estate Cowboys. This is your host, John Larson. This week's episode, we have focused on an investor spotlight of Graham Parham of Highlands Mortgage. And as I said earlier in the show, if any of my listeners would like to come on my show and talk a little bit about their experience investing in real estate and kind of give us some of the highlights, or maybe even some of the lowlights as well, that I greatly welcome that. I would love to have you on the show to talk about your experience investing in real estate. And if that's something that's interesting, go to our website, realestatecowboysdfw.com, drop us a message, and just let us know that you'd like to be on the show and give me your contact information. I'll give you a call. We'll have a conversation about what you're doing. And if everything sounds good, I'll have you on the next Investor Spotlight. But great show. Great to hear from Graham. I thought that he dropped a couple different golden nuggets. Number one, he said if he could do it all over again, he would have definitely went out and flew out to see the property that he purchased and meet the team that was providing the property, meet the team that purchased the property, did the renovation, basically meeting the provider. He said that was very, very important. And I truly believe that that's very important as well. Anytime you start a business relationship with anybody, I think you should definitely meet them face to face. And when you're investing in real estate, you really need to go look at the property and look at the neighborhood. Just because the spreadsheet says that it's going to be a good investment, the numbers look good on the spreadsheet, it's not always actual with real estate. If that property's in what I would call a war zone, bad neighborhood, it's always going to attract bad tenants that aren't going to pay their bills. You're going to deal with evictions. You might run into some theft and break-ins and things of that nature that can turn your investment into a really big negative and turn it into a money pit. And you definitely want to avoid that kind of stuff. So you really need to go out, do your homework, do your due diligence, especially the first go around working with any company. So I thought that was great advice from Graham. I was also happy to hear that his two properties with us in Dallas, I think he had purchased them a little over a year ago. It wasn't exactly a year. But to see that type of appreciation, on the one property, you're talking about over $30,000. That's just amazing. That right there, that goes back to what I'm talking about. 6 ways that real estate pays you. Just in appreciation. We're not even talking about the tax benefits. We're not even talking about the cash flow that he's earning right now. We're not talking about the principal pay down of the tenant, paying down his loan. We're just strictly talking about appreciation. And if Graham was to sell those properties right now, and trust me, there are properties that are in retail neighborhoods where a retail home buyer would gobble those up easily. He's getting 100% return on his money right there. And we're talking about, 16 months, 100% returns or greater with all the ways that real estate pays you. So I was really, really happy to hear that. And it was funny because what prompted me to do this episode is he called me and he was all excited. It was Christmas morning and he was 10 years old again. Called me, John, you'll never believe it. The 2 houses I bought from you last year, they've already appreciated over $30,000. He was so excited. And I said, Graham, I got to get you on the show. I need to do an investor spotlight on you because that is the kind of stuff that I'm talking about. That is what I'm preaching. That's what I want for all of my investors is to see 100% returns or greater on their investment. That's what I'm going for. So if you're interested in that, if you're interested in following the same path that Graham has, go to our website, realestatecowboysdfw.com, put in your information, get access to our properties, to our available inventory, to all of our passive income real estate investment options that are out there, not just single family homes, but for my IRA 401k investors. If you're self-directed or if you're not self-directed, we can get you self-directed. And we can get it to where you can start loaning money out of your IRA or 401k extremely passively, earning double-digit fixed returns on your money back into the retirement account, tax-free or tax-deferred. If you want to see 100% returns or greater on your money, let's talk about buying properties in fast-growing markets like DFW where we're seeing great appreciation because of all the job and population growth that's just being infiltrated into this market. And if you're someone who's retired, on the cusp of retirement, you have a family, you're looking for a vacation opportunity, a lifestyle investment is like what we like to call it, then maybe Belize might work well for you. We got some great opportunities in Belize. I believe Belize is one of the best areas in Central America right now to invest in a vacation rental, vacation home, private island, whatever it may be. All these options are available. Just go to the realestateCowboysDFW.com website. Put your information in. There's a ton of great stuff on the website as well. If you're just looking for education, we got some great videos there. You can also go back and listen to old podcasts of the Real Estate Cowboys radio show. And my book, The Passive Income Guide, it is almost ready. I know I've been teasing everybody saying it's almost out. It's right there. It's going to be out on Amazon, I would say, in the next week or two. So look out for that. I'm really excited about that book. And once again, thank you all for listening to the show. We'll be back next week with another edition of the Real Estate Cowboys. Remember, what's your return on life?
All opinions expressed by the hosts of the show are the opinions of American Real Estate Investments, LLC, and do not reflect the opinions of guests or sponsors. No personal or professional advice heard on this program should be considered an endorsement to follow a real estate financing or investment strategy. Before acting on any information, seek advice from your financial, tax, mortgage, or real estate advisor, as the information is not guaranteed and investment strategies have the potential for profit or loss.